Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Tuesday, April the 11th, 2016, or 17, I should say. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create four main hypotheses. This is in order to have a plan in place, so whatever the market throws at us. We do not try to predict the market. We try to have a plan in place, then determine what the market is doing and exercise the plan that's best suiting the market. This is a subscription room. If you're interested in checking it out, please send me an email at quantumleapfutures@gmail.com. There's no website. There's no blog. We do everything live here in the go-to during the pre-market, and then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so let's take a look at the news quickly. Not a lot of news today. 10 o'clock, we've got JOLTS jobs opening. 1 o'clock, we have 10-year bonds. These are all Eastern times. And then 1:45, we have FOMC Kashkari speaking. Tonight, we in the Globex, we will have some news coming out of Japan and out of China. But for the most part, it's not a really huge news week. Remember that this is also going to be a short week, Good Friday. So trading for futures will not reopen Thursday in the Globex. So treat Thursday as a Friday with no Globex overnight, and the market will not reopen until Sunday night at its regular opening time. Taking a look at yesterday, our main hypothesis was an open auction in range, a push down to between the 49 and the 47, possibly a false breakout, and a rotation up through value, completing a 80% destination trade through value, and then possibly a push up into the 64.50. Our second hypothesis was a open auction in range, a push up, and a failure to break out or a false breakout, and then a rotation down through to target that naked VPOC and the naked close, a chop around there, and then push through and close somewhere between 47 and 45. We were looking for a rotational day. We kind of got both Hypo 1 and Hypo 2 playing out parts of each. And this is the reason why we have multiple hypos, is because you can see, and lately we've been seeing a lot of this with this balance that we're in, we can see one or two or possibly even three of the hypos come to fruition during the course of the trading day. So each morning I like to start my day with a simple candlestick chart. What I'm looking for is I'm looking for where we are within the different time frames in terms of trend. I use a 9 EMA, a 20 SMA on all my charts. What I'm looking for is strength of the trend by slope and separation, where the trend is being challenged or violated, and any type of candlestick patterns or chart patterns that might give us a clue to destination. Monthly, we have a very strong upward trend for multi-year at the end of 15, beginning of 16. They violate that. They take it back in 16. Then we get this beautiful falling 3 candlestick pattern on the monthly. We actually talked about this when this was setting up, and we were looking for continuation and a new all-time high. They did that. They put in the 2401. Then we had our first negative month in March. So far, we have an inside bar on March, and we're below our April open. Our open of the month is 2357.50, so keep an eye on whether or not we're above or below that. But the overall trend is up on the monthly, and it doesn't even start to get challenged until we get back into the mid 2200s, 2265 right now. Going to the weekly, you got good slope and separation. We had this one-time framing, and then we had our first clue. We talked about this one, this setup, where we violated the one-time framing. Then we closed this technical gap, came down and tested the 9 EMA, and so far we're holding the 9 EMA, but we are losing some slope and separation, and we're challenging the trend. But we are right now one-time framing up on the weekly and holding this trend. So I'll be watching the 44. I'm using 47 as my warning line, and then I'm using 32.75 as my key line in the sand for a bigger rotation and a possible change of trend to the downside. On the daily, you can see that we are in a symmetrical triangle, and we are compressing for a break. We talked about this yesterday. We've been tightening. Two clues that have come to give us a clue that we're getting ready to break out is the fact that our 20-period daily ATR compressed down to under 15, and now it is expanding out. And right now our 20-period daily ATR, average true range, is expanded out to 1948. Yesterday was 1905. So we continue to expand on this range and compress in this balance area for a possible breakout. We are below the 9 and the 20 right now on the daily and starting to get some slope. So we are seeing the possibility, and I am not convinced it's to the downside as of yet, but I'm watching because we're getting some other clues as we move into the intraday. You can see that we were starting a downward trend overnight, and now we're coming up and we're coming and attacking the 9 and the 20 from below. Really sideways consolidation and compressing for a breakout. 30-minute, there is a I think it just got violated with this move above 52. Now I use, for an inverted cup and handle, Balkowski uses 65. I use the fib to 61.8. This is probably still a valid cup and handle. The measured move on this takes us down to that 47 level and attacks the weak low that we just put in. Our overnight low is 47.50. Our range low for the RTH yesterday was 47.50. So we have created a weak low down at that. So based on this inverted cup and handle, we do have, if it does not violate, and to me violation would be above the 52.50, 52.25. But if we do break the right rim line down here at 49, I would say you got a pretty good measured move to go down and tackle that weak low that we put in at 47.50. Overall, we're just going sideways and sideways consolidation right now on the 30-minute. On the 15-minute, same thing. Again, you can see this inverted cup and handle on the 15-minute as well. And then, of course, on the 5-minute, we're above the 9 and the 20, but we're really just chopping around right now with no clear destination or direction. We have a naked cross up here at 52. If we hold above the 9, that's your primary target right now for a move back up to close the naked cross. Taking a look at the structure, this is the composite. For those that are new in the room, it looks a little bit convoluted, but let me just walk you through. From the gap up day, let's just put it in context. So we had this long consolidation right here. We broke out of value on the breakout day. We created the 3-day island top, creating price acceptance at the 86.50, 86.75. They couldn't hold above. What do? They come back down to the last price accepted before the breakout, down at the MC VPOC at the 62. They find value, they find the buyers, okay, they came down to find late buyers, they accepted price higher up at the 73.25, then they gap up. What do? They come right back into the silent top and they accept that previous price in around the 86. Then we continue the price discovery, gap up, gap up, gap up, create two-day balance, accept price around the 23.19, then we get continuation and we move up, okay, and we put in the blow off top up here at 24.01 on the March contract, 23.98 on the June contract. Tried to hold value higher at the 82.83 level. Okay, they can't. What do? They come right back down to this small little micro composite that had the VPOC in around 59. Okay, they find buyers there, and then they work up and they come up and they try to hold that value up here at the 83 level, and they can't. What do? They get the significant breakout candle. They come down, they test the value area low, then they push down. Where do they come to? They come right to that 23.19. Okay, they find the buyers, they rotate back up, and then we come back up into this area. The sellers keep stepping in at the 64.50 area. We have undetermined fair value at 64.50, 59.50, 53.25. Our warning line is 48.50. I'm actually using the 47 because of that weak low. And then, the target below the 47 is 45, but the big target is back down into the 39.40 level, and likely a move down to test the lower side of that balance at 32.75. 32.75 is our key line in the sand. Below that, there's not much to hold us up, and I'd be looking for a trip back down towards that 19. And second time down, might get a bounce, but I would be thinking with any weakness below 32.75, the sellers are going to get aggressive this time, and we'd be looking for the bigger move down towards these gap fills, okay, right here, and coming down to fill the gaps and coming down towards this 23.09. The next big destination, okay, once we break that 32 and fail to get back above it quickly with a bounce, is all the way down here, okay, where they first accepted the price discovery and value outside of that longer-term micro-composite down here in the 22.86.25 level. If we can hold above the 47 level or just dip down and find buyers, okay, we still have undetermined fair value up here, which means we've got some more chop going on, okay, in between the 53 and the 64.50 area until we can determine what's fair value. From the breakout day on Tuesday 2 weeks ago, the most traded price is right here at 53.50. So if we can hold 48.50, that's your first target. 52 on that naked cross, 53.25 is a primary target, and then of course the longer time frame price acceptance is still higher at the 59 at 59.25, and this had shifted down the other day, but it shifted back up, and you can see we've got wicks above and below the last 3 days. So we've got both buyers and sellers trying to test each other's measure for the breakout. Now, I'm thinking we're probably going to see a breakout this week, but because of it being a light news week and a holiday week, it could hold for one more week, but we are going to break out of this area soon. I'm just not sure exactly when it's going to be, and we have to remain diligent. And your key lines in the sand for confirmation is the 32.75 above and the 70.50. I'm sorry, 32.75 below and 70.50 above. Everything else in between right now is simply noise and rotation. And you've got to be careful trading in here and make sure that you don't get stuck on the wrong side, because this area, okay, is, greater than 10 points. So you better have a 10-point, maximum drawdown capability if you want to hold on to something within this range. So taking a look at the overnight session, okay, is mainly net negative, meaning that most of the inventory overnight is short. Okay, so we want to be watching. Okay, if we get above that that VPOC from yesterday at 53 and a quarter, if we get above that VPOC, these shorts are going to have to cover. Okay, and they're going to be weak hands, and they're likely going to give us a squeeze higher. So really watch once we get up. I'm actually going to be watching the value area high, but 53 is going to be a warning line if we get above that. I got something going on in here, a lot of okay, everybody's hearing me, right? Okay, anyway, so right now, just starting to move our numbers over. Our overnight high is up at 55.75. Our overnight low is down at 47.50. All right, so we basically have a weak low between yesterday and the overnight low at 47.50. I'm watching the 47. It's 47.50. Sorry, I'm watching the 47 because that's the range low from Thursday of last week, and where I'm using as a warning line. The VPOC is not likely to shift. If it does shift, it's only going to shift 1 or 2 ticks here. So 23.50. And that's about all the information. You can see that this is some decent balance in the Globex again. In fact, session over session, the last 3 or 4 sessions, we've had pretty good balance, okay, and good kurtosis around the VPOCs, and value is not shifting much. So taking a look, we don't need this, so we can get rid of that. Expand this out. All right, so taking a look at my trade levels, well, this is a valid value area because of the Gaussian distribution. So I'm going to be using the LVN right here at 50.75, and if we get above that, I'm targeting that that 52 and 53 and a quarter, and the overnight high at 55.75. We've got the value area high up at 59. Remember that 59.50 is our microcomposite VPOC. So I have to just shift this, and I got to make sure that we come up here and accept price and then get the breakout higher. But I'll be targeting the 61.50, the IB from yesterday, and then the I'm not going to be targeting this anymore. I'm going to be looking for the breakout above 63 and a quarter, and then I'm going to be targeting that 66.75 just in front of our daily ATR upside target. Our daily full session day ATR is running at 1948, so off of the low overnight of 47.50. Our upside daily ATR target is up at 67. Our overnight high being 55.75 takes our daily ATR target down here to 36. So we're currently trading around the 50 level, and we have range capability, okay, up to 67, down to 36 without any range expansion. And that's important to understand, okay, in terms of your risk parameters. So all the other levels don't change because we're right here in the thick of it. And there's really not a lot to lean against okay, once we get into that 53 to 59 area. So that's going to be a big slush zone. You want to be in that trade, okay, before we get into this area. You don't want to be trying to execute a trade here. If you're going to execute any trade up here, it's got to be against the overnight high, the VWAP, and the midpoint from yesterday. But you're going to expect a lot of chop in this area. And I caution you, okay, because there's nothing to lean against here. We just keep crisscrossing all over the place up here. Now, if we get below 47, then you got something to lean against, okay, and you've got a bit of confirmation that they got to go down and find buyers below, okay, and extend the price discovery down. And I'd be looking for at least 45, if not 43 and a quarter or 40.75. And then, you know, our key line in the sand is now below our daily ATR, so that if we get below the 32.75, then you got to be looking in terms of a trend day down and the breakout day. So what is my main hypothesis? We are seeing some weakness right now, okay? So my main hypothesis is actually shifting, okay, to a price discovery lower as long as we get below the 47. So I am looking for an open auction in range out of value. I'm looking for a push up into the 52 to 53, maybe even the 55. Then I'm looking for responsive sellers to step in and rotate us and come down and challenge this this double bottom at 47.50, chop around here, and then break and push through down towards this 40.75, chop around here, and maybe a late day probe down towards this 32.75. So that is hypo 1. Equally weighted because of the balance that we're in is my hypo 2, which is an open auction in range just out of value. We could actually even open out of range because we do have time to break that 47.50 low. But right now I got to go with where we're trading. So I'm looking at an open auction in range out of value, a push down to the 47, break the double bottom, push down towards the 43 and a quarter, and somewhere between 43 and a quarter and 47.50, finding responsive buyers and rotating it up back into value and chopping around back into value between the 64.50 and the 53 and going sideways again today. So that is hypo 2. Hypo 3 is a break or an open outside of value and having an open drive or an open test drive, failing to get back into value, and then getting a breakout day and pushing down immediately down to the 40 to 39 area. I'm going to put that 39 on the chart as well. Chopping around here and then failing and breaking below the 32 and pushing down, okay, towards our weekly ATR target, which is running at 35.56, our 20-period weekly ATR. So off of the high over of the week at 63 and a quarter, our weekly downside ATR target is down here. Chop around here and maybe fail and get a trend day down back towards that 19. So that's hypo 3. And then finally, hypo 4 is an open auction in range out of value, a failure to get below 45, and then the buyers just take yes, and we start to rip up higher, all the way up into the 59 to 60 area, get up there very quick early on in the day, chop around here, and then push through and up towards the 67, break the 67, and then come up and close somewhere up here in the 71.50. I just don't know right now, with this being a holiday week, if we can see a big breakout, but we are seeing a bit of weakness coming in. So that's what I'm looking at in terms of my 4 main hypotheses. I'm giving, you know, equal weight to both the hypo 1 and hypo 2, with weighting towards the downside with hypo 3. Going to gold. Gold has not changed. We're still chopping around the composite VPOC. This is the most traded price going all the way back to October 2008. It shifted last week from the 2170 up to 5480, so we are accepting value higher, and I'm expecting price discovery to continue. I got long at 60.30 this morning at the pit open for gold, and my target right now is 65. I don't know if we haven't hit it yet, but we're coming up. 64.40 is the high so far. I'm looking for continuation. If we don't get resistance up here in the 65 area, look for them to push through, and the next target is the microcomposite range high up here at 73.30. We could get our continuation day and the breakout of this balance today on gold. So I'm looking, gold has got a strong trend up right now on the daily. So I would not fight this trend. If we look at the intraday, you can see that we've got good slope and separation happening, okay, and we've got a strong trend coming in on the pit session so far of gold. So that's going to complete our pre-market session. Key levels to watch for: 65 on gold, 73 above, and then if we don't break and we rotate back down, look for the rotation back to the 54.80 again, back into balance. Any failure below 46, then we could test the lower side of this balance and back to the 1230 area. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.